Welcome to another episode of Unlocking the Upside. I'm Jeff Robinson, and today we're tackling something that's been keeping me up at night, the art and science of building investment narratives that actually make sense.
And I'm James. Jeff, you've reviewed thousands of analyst reports throughout your career. What made the great ones stand out from the mediocre?
That's exactly where I wanted to start, James. You know, it's fascinating. I've noticed that the best analysts aren't necessarily the ones with the most complex models. They're the ones who can tell a story that holds together from every angle. Let me give you an example from my early days.
Before you go down that rabbit hole, Jeff, let's break this down for our listeners. What exactly do you mean by narrative consistency?
Right. Keeping me focused as always, James. Well, think about it this way. Investment forecasting is like trying to write the next great novel, but here's the twist. Many analysts get the plot completely wrong because they miss the most crucial element, narrative consistency.
That's such an interesting way to look at it, like being a detective and storyteller rolled into one.
Exactly, and what really fascinates me is how often even experienced analysts mess this up. They'll predict massive revenue growth, but completely forget about the infrastructure needed to support it. It's like writing a story where the hero suddenly learns to fly without explaining how.
You know what this reminds me of? Tesla's Model 3 production ramp-up story. Everyone focused on the robots, but completely missed the human element.
That's exactly right. And here's what's wild. Tesla had to completely redesign their production line after realizing automation wasn't the answer. They lost nearly $700 million in that quarter alone because their narrative didn't account for organizational learning curves.
So what does a good narrative integration look like? Any standout examples?
Microsoft's cloud transformation is probably the best recent example. They invested over $15 billion in data centers before Azure really took off. That's the kind of long-term narrative consistency we rarely see. They understood that success required multiple gears turning together.
And that investment really paid off. Azure's revenue grew 50% year over year in 2021.
But here's what's fascinating. For every Microsoft success story, there are dozens of WeWorks. They tried positioning themselves as a tech company with tech multiples when their fundamental business was real estate arbitrage. Their narrative fell apart so spectacularly that their valuation dropped from $47 billion to less than $8 billion in just 6 months.
Speaking of narratives falling apart, what about Netflix's content cost story? That's another interesting case of unexpected plot twists.
Oh man, Netflix is such a perfect example. Everyone assumed their content costs would decrease with scale, but the opposite happened. Their content budget went from $4.5 billion in 2015 to over $17 billion in 2021. Why? Because competition for premium content intensified dramatically.
That's fascinating how different parts of their business scaled in completely opposite directions.
Then look at Peloton. They're another classic case of narrative disconnection. They saw their stock surge 440% during COVID and built their whole future story around that continuing. They ended up with $1.2 billion in excess inventory because they misread temporary pandemic trends as permanent changes.
That's quite a contrast with companies that got their timing right, like ASML.
ASML is fascinating because they spent over 9 billion euros on R&D for their EUV technology before seeing any real revenue. But they understood the semiconductor industry roadmap so well that when demand hit, they had a virtual monopoly on the most critical technology in chip manufacturing.
It seems like timing is everything in these investment narratives.
Absolutely crucial. Look at Starbucks in China. They spent nearly a decade studying the market before their major expansion. Now they're opening a new store every 15 hours there. Compare that to Amazon's failure in China because they didn't adapt their narrative to local conditions.
How do you actually build these robust narratives? It seems incredibly complex.
You need 3 key elements. First, map out component interactions. Understand how every part of the business model affects others. Second, validate reinvestment patterns. Ensure planned investments align with demand forecasts. Third, stress test your narrative against contrary scenarios.
That's quite a challenge for analysts who are used to simpler forecasting methods.
It is, but look at Carvana. They lost over $2 billion in 2022, partly because analysts underestimated how complicated it is to run an integrated auto retail operation at scale. The old methods of simple growth assumptions just don't cut it anymore.
So what's the future of investment analysis look like?
We're moving toward a systems thinking approach. The most successful analysts will be those who can craft coherent narratives that capture business complexity while avoiding cognitive biases. And here's what's really interesting, our data shows that analysts who use systematic narrative frameworks outperform their peers by an average of 23% in forecast accuracy.
That's quite a significant performance gap.
And it's only going to widen as businesses become more complex. The future belongs to analysts who can tell coherent stories about where businesses are headed while backing those stories with solid operational logic and financial fundamentals. That's the new frontier in investment analysis. Before we wrap up today's episode, I want to share something that perfectly complements our discussion about investment narratives. Throughout my career, where I consistently earned top rankings in Institutional Investor Analyst Survey, I've seen how crucial it is to understand the complete investment story, not just the numbers. That's why I created Insight One, a revolutionary platform that brings institutional-grade investment analysis to everyone. We've taken my decades of experience analyzing markets and working with major financial institutions and transformed it into an interactive learning experience that adapts to your needs. What makes Insight One unique is how we combine deep market wisdom with sophisticated educational technology. Whether you're starting your investment journey or looking to sharpen your analytical skills, you'll learn the same frameworks and insights that I've used throughout my career with institutional investors. Ready to transform your investment analysis? Find us on the App Store, Google Play, or visit theinvestmentanalyst.com. Join us in revolutionizing investment education. Thanks for listening, and I'll see you next time.